Hi guys, good afternoon. This is Abid Khan and you are watching Karachians Academy YouTube channel. So today we have selected AS level accounting 9706 paper 1 and variant 2. Attempt February March 2022. So today we will be this is MCQ based paper, so we will be doing it today. So total marks are 1 hour 60 minutes. Total questions are 30, right? Total marks are 30. So it means you got 60 minutes and you have to do 30 questions. It means you got 2 minutes for every question. So let's move on to question number 1 of MCQs. MCQ number 1. MCQ number 1, what it says. So very carefully read the question and then solve it, right? So very carefully read the question, right? Which actions are taken in respect of the totals? He is asking about totals of 3-column cash book at the end of accounting period. So in 3-column cash book, what do we do with the totals? So this is the question, and he has given you 4 options. A, balance cash. You have to see what we do with the cash column and bank column of the cash book, okay, and what we do at the end of the period, at the end of your accounting period, what you do with the discounts, discount columns in your cash books, right? You have to check it and have to give the relevant answer for your. So A, cash and bank columns are balanced and discount columns are balanced. Cash and bank column are balanced here, this is right, and discount column are balanced. No, this is wrong because it is not balanced. We do make its total. Cash and bank balance are balanced. Yeah, cash and bank column are balanced, and discount column, yes, they are total. This is it. Apparently it looks looks correct option, but we will see the others. Cash and bank columns are total. No, this is wrong. Balanced discount column is balanced. This is absolutely wrong. And this is and cash and in D, cash and bank columns are total. They are total and they are balanced also. So this is incomplete answer. They are total. Yeah, they are total. So if you see based on this, option D is absolutely, you can ignore it. Means this is incorrect one. Both are incorrect. You can ignore it, and this ignore it you. So this one is B is very much correct answer. And for those students who have a very clear understanding, so for those students who have very clear understanding, we can, okay, so those students who have very clear understanding, they can move on to the second question. But I'm those students who do not have a strong concept, so I'm just making something clear. What is this? My balanced and total. So just if you remember, you know the books of prime entries, we got 6 books of prime entry: purchase day book and its return day book or return journal, and sales day book and its return journal. These are the 4. 5th one is cash book, and 6th one is general journal, right? So cash book is 3-column cash book. One is, so I have prepared one example here just to explain you guys. So what we do, you see, this is cash column. One side is debit and other side is credit, right? So your date, your particulars, your date. The column first is discount allowed column, then cash column and bank column. This is debit. Discount allowed is an expense or as a loss to the company, right? And the discount allowed which we normally gives to our customers who pays us, and we they pays us promptly and we give them some discount. So this is some sort of a charge on P&L. Okay, or likewise on the credit side, this is your payment side, cash column and bank column and the discount received, right? So this it shows the payment side. So I've just given you an example. When your first the opening of the month starts, this is opening, you got some balance. So in cash you have 200 balance, in bank you have 2000 balance, right? Okay, and in discount allowed you do not have balance. This is the P&L item, so it is closed on the closing of the financial year, right? If you got some money, you got some receipts, so they are debited. I say you got 2000 and 12,000 in bank, 14,000, and from your customer you got some 12,000. Actually the total he was to pay you to 12,200, and 200 you have given him the discount. So discount allowed means your customer receivable was to 12,200 and you have given him a discount of 200. So this is, and you got money 12,000, right? Likewise you made some payments, so 1,000 you payments to miscellaneous, your salaries or rent or blah blah, and from bank you paid 10,000, right? And to your suppliers you were to pay 11,000 and you paid them on time and they gave you 1,000 of the discount. So you settle your liability of 11,000, you debited the 11,000 your supplier, and you credited, the amount credited was from bank 10,000 and 1,000 was your discount received. This is your basically some sort of a gain. This is a gain or a profit, right? So when month will close on 31st, when it comes 31st of your month, what you do? From cash you make totals of your discounts, cash and bank. So also you see here, like discount received, you make total 1,000, but you do not make total of cash and bank. You have 2,200, you have paid 1,000, so there at the end you have balance of 1,200. So cash column are not total, they are balanced, and this balance is brought forward to the next month or next period, right? Likewise you have bank account 26,000 and you have paid 10,000 and 10,000, 20,000. Out of this 26,000 you have paid this much amount. So from 26,000 you will deduct it, and you got, when you balance your account, you have 6,000 in hand. So this 12,000 and 6,000 will go to the general ledger as an asset, right? And so what we do in cash book, we actually make the totals of discount columns and take this figure from, as I explained you, from books of prime entry. Actually all the data goes to general ledger, and in general ledger we maintain various accounts, right? All the accounts, it's a complete accounts are maintained here, right? From general ledger we balance them, and we make trial balance, and from trial balance we prepare financial statement. This is the cycle, or this is the process, right? All total of these books of entry, total, remember total of books of entries, every purchase book, day book, it's total, sales day book, it's total, purchase return, it's total of the month, total goes to the GL account. In GL account you have different accounts of sales and discount received, discount allowed, cash, bank. So total from these 5 books of entries goes to the general ledger, right? And from general ledger you make trial balance. So what happens next? In the GL account, in general ledger, so you maintain different accounts. Here you maintain discount received, discount allowed, cash, bank, and all the accounts are maintained here, right? So what we do, the total of discount allowed, this total, this is your debit, so it comes here as you post it here, right? Discount received, the total are posted to the general ledger. This discount received is 1000, it is credit, you post it here as credit. Cash, you got 1200, the balancing figure you post in the GL. Bank 6000, so you post this one. So from the cash flow you can understand that cash and bank columns are total and then balance, and the balancing figures are, so this one, that cash and bank balance are balance, so this is correct. And discounts column, they are not balanced, the total are transferred to the general ledger, so this total. Hope this question is clear to you. Move on to question number 2. MCQ number 2. MCQ 2. Which item is an example of the capital expenditure? This is very simple. You all know. Cost of repairs to an office building. Okay, it is, because cost of repairs to an office building, cost of repairing for business. No, cost of repairs to office building. This is a normal your recurring sort of a expense. So normally you do. So it is not a capital one. Cost of replacing business name on delivery. No, this is your marketing expense. This is again OPEX. This is your operating expense and this is marketing. It is the recurring nature of expense. Legal cost paid to purchase an office building. Okay. This is something a capital nature. I will explain you. Legal cost to collect outstanding. No, this is running cost. Right? During the year you pay to your legal department and they do collection and they do the litigation and all these things. So this is running cost. So this is not the capital one. Yeah, why I am saying this is the capital one? One, I am saying this is not, and this one is. These both are very much clear. This is not, this is very much clear. They are not the capital one. We get confused, students get confused here. So cost of repairs to an office building, this is a normal. If you see, in normally some small work normally arises in your building and you get them fixed. So these are the normal expenses, right? These are the normal expense. So this is your recurring. So this is your revenue expenditure, which is matched against your revenue. So this is revenue expenditure, right? This one is legal cost paid to purchase of an office equipment. Remember, when you get some non-current asset or a fixed asset, whenever you get it, so until that current non-current asset gets into operation, all the cost incurred till its first operation is capitalized, right? So here you have got the building and there are some legal work needed, means some documentation, registration, legalization, lease of the documents, and all these things are required. So whatever the payment we make and expenses we incurred in the capital expenditure in building, they become part of that building. So they are the capital expenditure. So this is clear to you. Move on. So our answer is, your answer is C, right? Move on to question number 3. So very carefully read this question. On 1st July 2021, very carefully read the question, right? Tim bought a delivery van for 10,000. Okay. When he purchased on July 1st, 2021, he paid an additional 900 to have racks fitted inside. Again, this is your delivery van. This is your NCA, non-current asset. And I explained you in question number 2 any cost incurred on any non-current asset or capital nature of expenditure. So if any expenditure that you incur on it before its operation, before it comes into operation, and those expenses helps improve its operation, so those all expenses will become its cost, right? So of this delivery vehicle, you paid an additional 900 to have racks fitted inside. It is a delivery vehicle, so you have to put some, you have to install some racks. So that racks cost will be your capex. Number one, this is your capex, right? And 800 for year insurance. This 800, this is paid for. We normally pay for all your fixed assets and current assets, non-current, current assets. We cover them through insurance. It is a normal business operation, and we cover them for a year, right? So when, if we are covering this van through insurance, 800 we are paying, so this is normal expenditure. So this is not this is a, we will say this is revenue expenditure, right? It is recurring nature, because when your 1 year will complete, again you will incur this expenditure. So this is, so we will not consider this. TIM provides for the depreciation at the rate of 10%. 10% is a per annum, very carefully see, right? Oh, okay. Depreciation is charged in the year of acquisition, full year depreciation. Okay, this is clear. If asset is for a month time, you have to charge for full year. So full year you have to charge the depreciation. What was the total of expenses recorded in TIM's income statement in respect of the van? He, okay, actually we do calculate one thing. We will do it here. I will explain you. Very carefully see what he is saying, and he is saying the expenses in respect of the van which will be charged to income expenditure account, total of those expenses. Okay, if I see, we can 10,000 is your cost, plus 900 is this one. So this is 10,900, and you have to charge 10% depreciation. Depreciation 10%. This will equal to 1090. This is your depreciation expense, right? This is the one expenditure. Despite his year closes on 30th of September. Remember one thing, he bought this equipment on 1st of July 2021, and after 3 months, only 3 months, after 3 months, his financial year is closing, right? But he, normally student makes mistake and they calculate, they forget this the full year condition given here. They normally overlook it, right, and calculate the full year depreciation in the chart full year. So for the 3 months. So you do not have to charge for 3 months depreciation, despite it remained in the business for 3 months, but you will be charging 1090 depreciation, right? And what normally a student makes mistakes, they get this 1090 when they see the name of the van, right, and they say only the capital expenditure has incurred on it, means depreciation was their expense, and they see where it is, and they get confused. So very carefully see, he is not asking you to give the expenses of depreciation. What he is asking, total of expenses. He is asking total of expenses. So you have to consider all expenses. Means this one is your DAPEX, depreciation expense, 1090, and this was also your expense for 1 year. So this 800 is prepaid. This is prepaid. This is asset, not expense. But you incurred this on 1st July and it is paid for 1 year, 12 months, right? So, and this remained in, okay. So on 31st of September, out of this 800, 12 months, 3 months insurance, now you have used up. This is your used up cost. So your used up cost is your expense. So it means out of this 800, the 3 months, which is just right, 800 divided by 12 into 3, 200. This, what is this? It is insurance expense. Insurance expense. And 600 is your current asset, which is prepaid. So if you see, this is also expense, which is insurance expense. Then your total R is 1290, right? So your answer is 1290. So question 3 answer is 1290. Okay guys, today I am making a very short videos because so that you have full concentration on it. So I did the 3 questions. So today we are ending on this 3rd question. In my next video, I'll start from question number 4. So hope you have enjoyed this video. So if you enjoyed it, then please click the like button and share this video with other students, so other students should also get benefit from this video. And also subscribe our channel so that you get every updated video on past paper. Thank you very much and bye for now.